Everyone, welcome aboard to another session of charting across the board. We traders trying to identify potential setups in the market, as well as capturing market opportunities as one of the biggest institutions post in their website, Citadel. Today is going to be a little unusual from the streams that we normally do. However, I would like to navigate the portfolio of the big institutions, unlike us, the retail traders. Jokes aside, my friend, I hope each one of you are doing great. For those who are new, welcome aboard. This is Marbob6. I am a harmonic pattern trader, and what we normally do here is to try to educate as much as we can for others to approach the market accordingly with an unbiased perspective. To start with the chart or the stream, apologize, I have some issues here in the background. I'm fixing in the background. I apologize, my friends. This is heading into Twitter as well and on YouTube. Everyone here is welcome to join. And we're going to be navigating the chart as well after the first segment on this episode, okay? What I normally like to do from quarter to quarter as we're entering the last quarter of, or the third quarter of 2024, is to navigate the portfolio, the 13 files for these major institutions such as Citadel, among Morgan Stanley and others, and what their portfolio, what their investments was, or the investment was since 2023 and 2024. Okay, I'm going to mute here my monitor. I have some delay in the background, is confusing my voice. Guys, apologize. Okay, here. Now let's begin with the chart, my friends. As I said before, I normally like to track the portfolio of these major players, such as Citadel, Morgan Stanley, Bridgewater from our friend Ray Dalio, Point72, also another fund management. You guys know, Steve Cohen. We're going to be navigating their portfolio. Each quarter, they present a 13 form that needs to be filed with the SEC. And here we are navigating what these guys have been accumulating since last year. And also most recently on the closing for the Q2 of 2024. If there is any changes within their portfolio, new asset, new allocation, we're going to be touching what these big players are trading, okay? Everyone, welcome aboard. Once again, this is Marbob6. We're going to be navigating the charts as well after this segment, starting with our friend. I wouldn't say our friend, but starting with one of the big players, Citadel. I would like to share here the information I normally like to track each quarter, okay? On Citadel Advisors, you guys can see here their portfolio. They are pretty well diversified, I should say, pretty much since Q1 of 2023, right? Where the crash was supposed to occur. What occurred there is there are certain sectors that caught my attention. For example, the XLF or the financial sector, where these players were accumulating tremendously on this particular sector. Okay, 17% of their asset allocation was only for the financial sector, the XLF, I'm assuming here in this case, okay? That was on Q1. As you guys remember, where our friend, I don't want to say our friend because he's not our friend, right? Jamie Dimon was promoting or suggesting that an economic hurricane was about to occur that was at the lows, nearly the lows of 2023. And now here we are, 2024, making new all-time high across the board. However, after experiencing some turbulences in the market, we are tracking those levels accordingly, either on the crypto space as well as on equities. Once again, Q1 of 2023, Citadel was heavily loaded, I would say, on financial sector, as well as a Q2, another increase of 1%, 18% from 17 to 18%. Q3, the same one, minor change on Q3 of 2023. Q4, an increase again, nearly 19%. On Q4 of 2023, nearly at the end of the year, and now most recently, the same levels, the same reading on Q1 as well as Q2, another increase, 19%. Why are these institutions loading so much on financials when they are projecting that an economic collapse is about to occur, or an economic turbulence, or the apocalypse, right? Moving into Morgan Stanley, another big institution, right? The same big institution has been loading massively since Q2 of 2023. 30% of their assets only on financial, nearly 31. Pretty much at the lows when all the fear back in 2023 was projected. If you guys recall, we have the major fear on small banks, right? However, we can see that these big institutions were loading at the lows once again as a composite operator suggested by Wyckoff within the schematic. Okay, Q2 of 2023, 30%, 31% on their portfolio asset allocation, 31% on Q3, Q4 of 2023, 31% again. No major changes between these two quarters. On Q1, minor change, 31.49% still on financials. And now recently, on August, they filed the recent 13 file with another 31% allocation on Q2. Are these institutions continues to load on the same sector? And which one will be the next rotation? I do have an idea. Of course, it's only an interpretation of my readings after looking at some of these major players, right? Now that we have the rate cuts in the car, that may be a case or an argument for, if you guys can tell me which sector might be in the car for the next rotation, when there might be some fear also. In my opinion, if rate cuts are coming, as we were projecting since last year for this year, if that's the case, we then may see an increase in interest on real estate, the XLRE, where I'm tracking closely if there might be an interest. As of now, I did not find any readings yet, okay? We'll see that heading towards next year as the rate cuts occur in September, if that's the case, of course. Bridgewater, Ray Dalio, the same conditions, the same readings here on the 13 files. Finance clearly was indeed, right, a major sector where these big institutions were loading massively. Also in healthcare, I noticed here, since Q1 of 2023, pretty much diversified between these three sectors: financials, healthcare, and consumer staples, right? Massive percentage here, 27%. No major changes on financials, neither consumer staples. The next one, our friend Steve Cohen. Let's see what his portfolio looks like. From 0.72, those of you who are following harmonic ratios, we argue, or we have an agreement, not an agreement, an argument, I should say, that the 0.72 on their company comes from the 0.707, slightly higher than this harmonic ratio for the 0.72 after tracking many assets, reversing at this harmonic ratio, the 0.72, coincidentally, right? Therefore, there is a joke, an insider joke in our room, okay? Looking at 0.72 from Steve Cohen, major performer or outperformer from last year in the IT sector or information technology as the hype occurred on Nvidia, right? You guys remember the massive performer on Nvidia when others were calling for a major crash on the micros, not the micros, but the microchips. They were calling for a major collapse. However, we have a major outperformer being with technology since last year, right? Now the last one, a very brief comment because I do not want to go over many details here. What are they buying? This is only a personal challenge. My journey takes place. Therefore, I look what these guys are buying rather than paying attention to the news and what they're saying or suggesting. For example, Morgan Stanley, we remember Mike Wilson suggesting also a major collapse last year or since 2022 even, right? Suggesting major collapse. However, we look at their portfolio, major asset allocation in finance, right? 31% is a massive move or a massive amount of money from their asset under management around 147 billions, right? 30% of that amount is massive. If you are buying, right, necessarily not selling, but buying, you are accumulating here, but also projecting fear on the news. It doesn't align with the readings here, okay? Now, to finalize with this segment, a very brief one, if you guys also remember, one of the bubble callers, our friend Jeremy Grantham, was he a hidden bull? Jeremy Grantham, I would call him that he was indeed a hidden bull. Why? Because if I look at his asset allocation as his portfolio, once again, you guys can observe here on his portfolio, he was the Apple bull, in my opinion, right? But he was also promoting fear on Q1, Q3. You guys can observe all of his purchases on this particular share on Apple or this stock. The last buying was over 1 million shares, right? Most recently in June, between June and July, okay? 1 million shares purchased between 2023 and 2024. However, you guys can observe on the media, not necessarily the main media, but the alternative media across the internet, suggesting the major crash, right? The 3 standard deviations. However, their portfolio pretty well played, I would say, because on 2021, they were selling their shares, right? At least for that period, and then started loading once again at the lows. Very well played, as you say here for Jeremy Grantham. However, a little deceiving, in my opinion, when you're purchasing shares, however, promoting that a major bubble will occur, because in that case, you're also part of the bubble, right? Especially when you are managing a major amount of money, $30.2 billion, okay? Most recently, I wanted to talk about Nvidia. Why Nvidia? Because on Nvidia, we got some news yesterday. You guys remember? We got some news with Nvidia getting a subpoena from the Department of Justice. That came yesterday on the news. However, in our room, we were tracking the readings within the technical information. For those of you unfamiliar, we track this also within the room. And we were tracking this reading on Nvidia pretty much on earnings. That was, if you guys allow me 1 second, I'm trying to identify the chart. This one. On August the 28th, we're looking at the variables within the harmonic framework also, presenting a W formation. For those of you unfamiliar, an M formation, in this case, a pattern in green, represent a bullish pattern. In the case of the W formation, the shape of a W represent a bearish structure, where we presented those readings as well as executing a setup, not necessarily on Nvidia, but on the major index, on the S&P 500, where we have 500 companies within the same index. Therefore, it will be a little redundant to also present another short execution only on Nvidia and disregard the major index, right? The US, the S&P 500. However, after presenting the same readings for bearish conditions, what occurred on Nvidia yesterday, or a narrative came as a catalyst, in my opinion, because all we do here is we look at the technicals normally, right? We then have some news that react or comes as a catalyst. And then, of course, this also helps to navigate or either propel the prices higher or send the prices lower. That was indeed the case. After the variables were presented in the chart, we presented a decline of 20% from where the levels were presented. In this case, from the bearish cipher pattern, in this case, the first PRC, the potential reversal zone, acted as a major resistance within the $130 region before declining pretty much a 20%. This is pretty much a behavior of an altcoin, correct? So 20% decline, nearly 20%, 19.40 after the pause. With the S&P declining also 3%, we have a reading on a major time frame also that we presented yesterday, last night, of our major reading on the S&P and where could this potentially head in the upcoming days, as we are tracking our pretty much a major W formation presented already many times. We said that we are beating the dead horse here over and over because this is what we tracked and traded before. The first execution came at 57.03, decline of 10%, and now we're having another setup in the room. For those interested, you guys can visit, of course, marble6.com, okay? Only if you would like to track this type of analysis, okay? Now, there are other variables I would like to go briefly, very briefly, only on BTC. Once again, on the weekly, we have a major formation. However, please be aware that we are tracking the price behavior here on the S&P 500. Why? Because we also have another major reading, okay? I know some of them are calling for 6,000 already, when initially all we saw was a 3,000 projection, right? Or 3,000 and 2,000 back in 2022, with a focus on shorting only after presenting pretty much a bull market with the 64% rally, right? This is indeed trading against the trend, not the way we would like to trade. And by the way, none of these represent financial advice, but rather an interpretation of the technical information. Reaction move, reactive move, 10% on the S&P, another lower high. You guys who track GAN or Garley or any other technician from the past are already aware what this may represent in the upcoming days. Of course, this is also subject to new information, new variables within our readings in order to identify potential executions. Once again, none of these represent financial advice, but rather an interpretation of the technical information. Moving into Bitcoin, to finalize the stream, because this is only a brief one, we are tracking some levels here on this particular instrument, okay? There might be an M formation, a pending formation between the 52,000, 53,000 even, all the way to 50,000. That must be a level that must be held as support. I do not know why I can't talk today. This might be a level that needs to be defended for the bulls in order to continue higher, right? Otherwise, we may look at lower levels as we're expecting an intersection between price and time expected for the week of September the 9th. We are expecting an intersection between price and time. Once again, potentially a lower low than the previous low. We will see. We're not trying to predict here. As you guys know, we like to trade accordingly, okay? There was other arguments before for a bullish reaccumulation case. However, after the readings were presenting lower lows, lower highs, we need to move and react accordingly. Brief comment on gold. Also another setup, right, that was presented in the room for those users on Noanda. There was a decline from this rising wedge, potential measure move of the structure around or targeting the $54 and $14 on gold. We, however, found support currently at $54.73 and bouncing as of now. However, the measure move of the structure ideally will take the prices to this ideal scenario, okay? There's a major formation also on the weekly and the monthly on gold that we are going to be navigating those levels in the room, okay? If you guys are interested, once again, you can always visit us on marble6.com and we can share, of course, ideas in a healthy environment. Everyone, thank you for being here. This is Marble6. Only wanted to present a brief stream today, analyzing what these big institutions are buying or were buying since last year, and also at the end of this Q2, heading into the last quarter of the year between Q3 and Q4. Will there be any changes in the market? We will see. Those of you who are already within the room are aware of our positions. Therefore, once again, if you are interested in learning the technical proposition with an unbiased perspective, you guys can always join us. Thank you guys for being here, and I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.